Just when you thought that the FTX situation couldn't get any wilder, it does, because it was just leaked that FTX had ties to over 130 separate companies, and some of these were your favorite cryptocurrency projects. Now, in this video, we're going to talk about the two different kinds of exposure that FTX, Sam Bankman-Fried, and Alameda had, the first being indirect exposure and the second being direct exposure. Now, not all of these projects are set to go bankrupt, but others are in a lot of trouble and turmoil. So we're going to break down these two different risk categories in today's video and fully understand what's happening with this entire FTX situation, because for some projects, as I said, it's going to be really bad for. Now, other projects are going to be able to survive because of the indirect exposure that they have. Now, if you're new to the channel, welcome back. My name is Brendan, and we make videos just like this one every single week, around 2 to 3 times a week. So if you like the content that I have by the end of this video, consider hitting that subscribe button. But with that being said, let's go ahead and dive into today's topic in today's video. Now, when this whole FTX situation unfolded, we didn't know the full extent of who was exposed to FTX and Alameda. Now we do, because in a recent post from Blockworks, they tweeted out 134 companies that are directly correlated to FTX and Alameda. And so inside of this, there is a long list. We won't bother reading all 134 names, but I do want to put them on screen here so that everyone can read through and see if there's maybe something inside of here that is directly important to you. Because for a lot of these companies, they will not be important to all of us, but there might just be a few inside of this list that are going to be very meaningful and maybe even impactful for you. Now, I hope no one had money or crypto affiliated with any of these, but there still are some relatively well-known names inside of this list. A lot of these have to do with branches or extensions or sister companies of Alameda, as we can see from the beginning of this portion. But then there are some more popular names like Blockfolio, which I'm sure a lot of you are familiar with. And so as we continue our way through this list, I want everyone to just really have the full extension and knowledge of what these companies were and how they had something called direct exposure to FTX. Now, let's break down exactly what this means. What does it mean to have indirect versus direct exposure? Well, if we go and we look at something like FTT, and we'll look at a chart for that in just a second, FTT had direct exposure to FTX because the FTT token is the native token for FTX. And so without FTX, FTT really serves no purpose because the entire utility of the cryptocurrency is for the FTX exchange. And without that, it loses its purpose and utility. And so this would be something that is direct exposure, meaning that this entity or this asset cannot function without FTX. And that would be something called direct exposure. And so if we go over and we look at FTT, there's a reason why it is down a lot. In fact, if we measure this out, just a couple of days ago, FTT was up around $25 to $26, and just now it's sitting below $1, which means that it has dropped around 93% in the last week or so, give or take just a little bit of room for error there. But any cryptocurrency that's down in the last week or so by over 90%, that is a big red flag. Now, while this is something that is direct exposure because it cannot function without FTX, a lot of these entities that we looked at here are also directly exposed to FTX, meaning that they are not going to be able to operate without FTX at the end of the day. Now, there's also a list of assets that are indirectly exposed to FTX, and this is going to be things like Solana or 3 Commas or a lot of the other cryptocurrencies on this list, or even just projects. Not even all of these are just crypto. And so as you make your way through this list, I want to again have this on screen so everyone can understand what is happening here. Is we can see that from Sam Bankman-Fried's investments, they are broken up between Alameda and Alameda's investments, FTX through their acquisitions and then their investments. Then we have FTX through their acquisitions and their investments, because remember here, FTX and FTX US are two separate legal entities. They're two separate companies. They were broken up because FTX could not be regulated inside of the US. Very similarly to how Binance has Binance and Binance US as two separate companies. And then at the bottom here, we have FTX Ventures and their investments. So a lot of really significant cryptocurrencies and projects are a part of this list. We can see that there's things like Polygon and Solana and Blockfolio and Ledger X. And the list goes on and on. Yuga Labs, Lido, and so on and so forth. And so you can read the full list. I'm not going to, again, read every single project on this list, but the list is extensive and it goes on. But all of these have indirect exposure to FTX, right? Because what they are is their own individual project. They are their own entity with their own team, their own structure, meaning that they can operate. The team isn't going to go away because FTX stopped functioning. Most of these cryptos like Lido or Solana or Polygon or whatever it is, Yuga Labs, can operate without FTX. They're listed on Binance, they're listed on plenty of other exchanges, and they have working products, and their functionality will not go away. The layer 1 of Solana will not go away. Polygon's ability to be a scaling solution for Ethereum will not go away because FTX has gone bankrupt and they've gone insolvent. Yuga Labs will not have to take all of their NFTs off of the blockchain or off of Ethereum's blockchain because FTX went out of business. Now, the exposure that Sam Bankman-Fried had to these can hurt these projects because what he did is he was able to either give financially or give through his I guess, public figure stature to these projects. So he was able to give public exposure, or he was able to give financially to these projects. And so that's why they're able to be hurt indirectly. Now, again, the reason that they are not direct exposure is because they can function without FTX. They have their own team, they have their own projects, they have their own products. And at the end of the day, they can function and move on despite getting hit with some of the indirect exposure. Now, what this means is that just because something has indirect exposure doesn't mean that it can't fail. In fact, for some of these crypto projects, for some of the things on this list, the largeness of the FTX going to zero and the largeness of the FTX bankruptcy is going to be too much of a hit. Even if it's indirectly, it's going to be too much for some of these projects to handle, and some of these projects will likely go bankrupt because of the entire FTX situation. Maybe it's people losing trust in them, maybe it's the lack of funding, maybe it's the lack of sudden exposure, but we need to understand that not all these projects are safe as well. Again, a lot of them probably will survive, but it doesn't mean that all of them will. Now, if we're going back to the idea here, the big thought here, and Binance's CEO, CZ, as I'm sure a lot of people are familiar with, has been talking about just the current situation and how crazy it is. Kind of saying we don't know the extent that this could have on the crypto industry. And that's his big argue point right now, is that we don't know the extent that this is going to have on the cryptocurrency industry. And maybe that there's more companies down the domino line that are going to fail as well. And that could impact even more people. So the two big takeaways is that if you are not going to be a long-term investor of crypto, or if you're trying to make this trading, maybe this isn't the best time to make these short little trades. Again, if you're an experienced trader, then obviously anyone knows that volatility means money, and with more volatility comes more risk, but it also comes with more reward. So what he's saying here is that if you're a crypto noob, this might be a time to just kind of sit on the sidelines. And number two, I think the big lesson here is that if it's not your keys, it's not your crypto. That's a big kind of point that we really try to hammer home at Crypt Nation. So if you're a part of there, you've heard us say that statement a lot. But what this means is that on an exchange, they own the keys, so they technically own your crypto. Now, if you have your own soft or hard wallet, then you own the keys to your crypto, meaning that no one can freeze your crypto account if you have your own private wallet. And the only way that someone can do that and steal those or halt them is that if you have given away or were careless with your private keys and with your wallet. So what a lot of people are seeing here is a withdrawal from exchanges to wallets, so that way they don't have to worry about an FTX situation that causes them to lose their crypto, because if it's in a wallet, then them and them alone are in charge of their crypto's security. So the big thing here is if it's not your keys, it's not your crypto at the end of the day. No matter what you want to think, if an exchange goes to zero, the odds are you are going to lose 99 to 100% from really what you had stashed on there. And that's like that's really the big hammer point home here. And so as we can kind of see that the way that this is progressing, if we want to go back and we want to look at something like Bitcoin has a couple of key levels, and I kind of just want to take a look at Bitcoin before we exit out here. But what we're seeing is that Bitcoin has a large trend, and this is probably its own topic for its own separate video because we can go so in depth on this, but I want to bring it up, and we'll probably touch on this on Friday. But what we have seen is that throughout this year, Bitcoin has a long trend of testing previous support as resistance. And we'll just look at a few examples right here. And the way that this looks essentially is that if we were to outline this, we could say, hey, guess what? Bitcoin bottomed here, and then after it broke through, it topped at this exact point. So previous support broke through, tested as resistance. The previous support level of the previous consolidation range turned into the top of the current consolidation range. And then what do you know? The bottom of this consolidation range turned into the top of the next consolidation range. And then what do you know? Here we are right now, already looking at the bottom of our previous range, now being tested and rejected as resistance from what we are currently testing. So the previous bottom of our last consolidation range, around 17,500, looks like it's now being the rejection point, or potentially even the top of this resistance range. And so we're going to go way more in detail on this in a future video, but I wanted to make sure that it was at least available to everyone's attention. Does that mean that Bitcoin has to just tank another 5, 10, 15%? Does that mean that it can't bottom here? The answer is no, right? We don't have enough information to say whether we're going to go down another 20% or whether we're going to bottom here and rebound to all-time highs. The fact of the matter is that we only have a couple of daily candles in here, and this is not enough information to say whether a bottom is in or not. But you can be sure that we're going to be the ones to keep all of you updated. So if you are interested in learning and continuing to hear what's happening in the space, definitely hit that like button, hit that subscribe button, and stick around with us because, again, we have content like this coming out every single week. But thank you all for watching, and I will see all of you in tomorrow's video.